What's going on, guys? Welcome back to another video. In this video, we're going to be talking about ticker symbol HCMC, Healthier Choices Management Corp. A lot of you guys have been commenting about this stock under my previous video, so I had to take a look at it and I decided to make a video analyzing this stock. But before we get into all of the very interesting information surrounding this company, you guys need to know that this is a extremely risky stock. You can see over here that it is only traded on the OTC markets, and you cannot trade this on Webull, and I'm pretty sure you cannot trade it on Robinhood as well. Now, I don't have a position in this stock at all. I just want to fully disclose that to you guys before we get into the information. But we can see that this stock was trading at an extremely low amount and then absolutely ripped up on some news that we are going to discuss later in this video. But before we get into all of that information, if you guys enjoy the content that I provide you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell if you want to see more videos like this. So before we get into some of the information that could really send this stock going higher in the near future, we do need to figure out exactly what this company does. So if we come over to the company website, we can see that Healthier Choices Management Corp is a US-based publicly traded company specializing in providing consumers with healthier alternatives to everyday lifestyle choices. So essentially what that means is that they are in the business on focusing on safer vaping technology as well as synthetic or imitation nicotine compositions, processes, and methods of manufacture. HCMC continues to innovate and hopes to expand this suite in the future. Now, if we come over to fintel.io, we can take a look at the insider trading report, and we can see that insider ownership is about 13% of the overall shares. Now, that's pretty interesting, but what's even more interesting is if we come over here, we can see that the CEO of this company, Jeffrey Holman, owns 5.65% of the company with 11 billion shares. We also see that some of the other big executives also own over 1% of the company, which typically would be a very good sign. So the main reason why HCMC has been rocketing over the past month is there's a very aggressive lawsuit that they have filed against Philip Morris, and it looks like they have a possibility to win this lawsuit. Now, if we come over here, we can take a look at the first article that came out that gives us some details about this lawsuit. So Healthier Choices Management Corp, OTC HCMC, today announced the filing of its patent infringement lawsuit against Philip Morris USA Inc. Now, this lawsuit was filed back in November of 2020, but it is resurfacing in the news as more court dates have been assigned, and Philip Morris Products SA in connection with their product known and marketed as Iqos. Now, what is Iqos? If we come over here, we can see that smoking giants Philip Morris and Altria have launched Iqos, a heat stick that heats up rather than burns tobacco, for sale in the United States, and it's supposed to be marketed as a safer alternative to vaping. Now, doctors say that with any tobacco product, the health risks are high, and medical experts say it's too soon to declare this a safer choice, and the long-term medical risks associated with Iqos are still unknown. But from what I've read online, Iqos products are very popular in the European market and are starting to gain popularity in the United States markets as well. Going back and looking into some of the more intricate details of this lawsuit, we can see that the HCMC's lawsuit includes claims that Philip Morris is infringing HCMC's patent rights in connection with Iqos, an alternative tobacco product marketed and sold by Philip Morris. Philip Morris claims that it is currently approaching 14 million users of its Iqos product and has reportedly invested over $3 billion in their smokeless tobacco products. Now, the reason that they are doing this is that a lot of products are coming out on the market that don't even include tobacco. They're basically just nicotine delivery devices, and those are becoming more popular in the smoking crowd and the non-smoking crowd as well. So Philip Morris understands that the market is shifting, and they are trying to get out in front of these changing markets and still remain profitable and really maintain their business. Now, Philip Morris isn't really just brushing this off as a little lawsuit that they can just squash by paying HCMC off. They're pretty serious about this lawsuit. If we come over here, they actually directly mentioned these lawsuits in one of their SEC filings. So if we come over here, we can see that risks related to legal challenges and investigations, litigation related to tobacco use, and exposure to environmental tobacco smoke could substantially reduce our profitability and could severely impair our liquidity. There is litigation related to tobacco products pending in certain jurisdictions in which we operate. Damages claimed in some tobacco-related litigation are significant, and in certain cases in Brazil, Canada, and Nigeria range into the billions of US dollars. So there are two ways that this could really reduce profitability. Now, there is some due diligence posted on Twitter, and we're going to go over some of the points of this DD post and how legitimate they are and how this could severely reduce Philip Morris's profitability and actually benefit HCMC. So if we come over here, we can see that there are many negative views on here stating that it is impossible for HCMC to reach $1, and this individual thinks that HCMC could get to $1. At the current time, we can see that HCMC is trading for about a third of a penny. Going back over to this post, we can see that the lawsuit versus Philip Morris is seeking approximately 1.5 to 1.7 billion US dollars. It is also very likely there will be a royalty payment for Philip Morris to continue use of the Iqos technology. This would create a substantial revenue stream for HCMC, and that would really be a good sign for the stock in the future. But again, I don't have any money invested in this company. This is for educational purposes only. Now, two, Philip Morris does not want to take this to court. This is this individual's opinion. So this will be a very bad image for Philip Morris, even if it does win the case, which this individual believes is not likely. Legal issues being resolved in court will drive the stock price down. That is very possible, and investors will exit upon arrival of the court date. Further, this will attract more option and short sellers, which would further drive down the price. By settling out of court, Philip Morris would avoid negative publicity, will preserve for the most part its stock price, and will likely be able to continue the use of the technology, which in my opinion is very substantial. That's really what Philip Morris wants to do. The markets are changing, and they need to have this Iqos technology in their toolbox and their revenue stream in order to stay afloat. There is a possibility that Philip Morris buys out HCMC. I don't think that is possible. That is just what this individual is saying. This gives a lot of room for growth, whether they continue the HCMC brand or incorporate directly to the Philip Morris brand. The stock price will still rise significantly. I don't see this as the probable solution, but it is still a possibility. Now, most importantly, there will not be a reverse split. The CEO owns 11 billion shares, which I showed you guys earlier in this video. Many company employees own preferred stocks that are in the process of being converted into common stock, which will allow them to watch their portfolio grow. This happened last week, which, given the 20-day requirement on notification, lines itself up perfectly with the court-likely settlement date. Something is happening, and the company is giving very good hints. Now, what this individual goes on to say in part 5, I actually agree with, and I think this is a possibility for HCMC. The most likely outcome is what most are neglecting to see. The company, upon a settlement, will most likely buy back most outstanding shares and retire them. They can do this with roughly 400 to 500 million US dollars, which still leaves another 1 billion US dollars from a settlement for their usage. This would actually send the stock price going absolutely insane. Now, I don't think the stock could 250x and go to $1, but we could see some significant growth due to the number of insiders who own common shares, including the CEO, along with the new investor at 3 billion shares, and most likely a partner, supporter, confidant of the CEO. This is all in their best interest to drive the price up. Reverse splits will raise the price, but lowers the number of owned stock. This will have no influence on the value of your portfolio. Now, in general, reverse reverse splits for the long term are terrible for a company. It's the actual stock splits where the company actually gives you more shares at a lower price. They don't actually give you more shares, but your shares actually get converted. So for an example, if Tesla did another stock split and you owned 100 shares of Tesla, and let's say just for the purposes of this example, Tesla was trading at 1,000 and you owned 100 shares of Tesla, and they did a 4-for-1 or a 1-for-4 stock split, you would then own 400 shares of Tesla at a $250 price point. So in general, I think that this stock is incredibly risky. Now, if you are already into this company and you are making a lot of money, it could be smart to take some profits. That's really what I like to do when I'm trading any penny stock, but usually I would never touch a stock like this. So you put in a substantial amount of money into the initial investment. If it goes down 20%, you sell off, or you continue to buy the dip if you have a lot of conviction. But if the stock goes up between 20 and 30%, you sell off your initial investment, and then you have 20 to 30% of your original initial investment in shares, so you get to ride out the profit for the long term. So that is going to be it for this update on HCMC. If you guys enjoyed the information that I provided for you in this video, make sure you go down and hit the like button and hit the subscribe button, and make sure you turn on that notification bell if you want to see more videos like this. So I hope you guys are having a great weekend, and I'll see you guys in the next video.